Good day, everyone. My name is James Thompson, and I've recently joined Seplat Energy as Head of Investor Relations. As we head into 2024, we have a number of important catalysts ahead of us. To walk you through these, our business, and the opportunities that lie ahead, I'm delighted to be able to introduce to you Colin Smith, who's Head of Research at Capital Access Group, and he'll be interviewing our CEO, Mr. Roger Brown. Colin, over to you.
Good day, everyone, and thank you for joining us. Seplat Energy is a 750 million sterling market cap company. It's an indigenous Nigerian energy-focused business listed in both London and Lagos. Today I'll be talking to Roger about the company's operations and outlook and getting his insights into Nigeria and its energy industry. Great to be able to speak with you today. Perhaps first of all, you could just give us an introduction about Seplat Energy for those who are not familiar with the story.
Thank you. Seplat Energy is quite a new company. It was founded in 2009. We bought our first assets in 2010. 2014 we listed, and we dual listed on Lagos and London. And the company itself is 7 blocks onshore Nigeria, so all Nigeria. Oil and gas, mixture of the two. And we have, I guess since listing, we have doubled our reserves. So we have over 400 million barrels of oil equivalent, roughly distributed between gas and oil itself. The oil is exported through multiple terminals in Nigeria, and then the gas is all domestic gas. And the majority of that gas goes into the power sector within Nigeria, and any day in Nigeria, our gas is probably powering about a third of the grid. So it's quite a material domestic gas business. The listing in 2014 was very material for us as a business and has allowed us to grow quite rapidly since then. So that's Seplat.
That's very helpful as an introduction. And obviously, as your assets are in Nigeria, it's maybe worth thinking a little bit about Nigeria itself, because it's regarded as quite a complex area to operate in. But we've had a new president, and he's made some pretty bold steps. Perhaps you could help talk a little bit about that, what it means for Nigeria and what it means for Seplat.
President Tinubu was sworn in on the 29th of May 2023. And in his first couple of weeks of office, he's made some material changes. So Nigeria over the years had been subsidizing fuel subsidy, and it had been crippling the Nigerian economy. And one of the first actions that the president took was removing that fuel subsidy, which had been talked about for years. That's very material for the country. One of the other big issues of the country is that there were multiple exchange rates for the Naira. Okay, and what he's done is unified the Naira and allowed that to float. Okay, and what will happen over a period of time is that the green shoots will then start to come into the country, because you needed to float the currency to allow people to get money out of Nigeria, then for them to reinvest back into Nigeria. That'll take time. I think it'll take most of 2024, but we'll start to see some fruition of that. He's made some regulatory changes. He's brought in the Electricity Act and signed it off the first couple of weeks. And what that means is that the states themselves can then develop the electricity sector, and you can get gas suppliers, power generators and distribution companies working more closely together. I think that's going to be very material for developing the electricity sector in Nigeria, which is very, very needed. And you'll start to see some fruition coming through in that. So a lot of changes. The parastatals are now getting new boards in place, and foreign direct investment, which is the President Tinubu talked about this in his inauguration speech, is allowing and facilitating money to come into Nigeria and actually benefit from the massive growth. I mean, Nigeria's got 220 million people today, and will double to over 450 in the next 30 years by the predictions. So it's a very, very, very material country in the world.
That's really interesting. And turning to Seplat itself, can you just comment a little bit about its operating performance last year? Because I think we've seen production going up quite a bit year on year. What's driven that performance, and what can we look forward to?
So we have, as I said, 7 onshore blocks. We've got 4 in the west We have got one in the east, a small one in between east and west, and then one in the south of the country. So the west is really most of our production. We've relied on one pipeline, which is the Transformational pipeline system. And what we did is, back in 2022, we put in place a new pipeline to the Chevron terminal. So we have 2 export routes for our western assets. And that has made a material difference in terms of our oil to market. In the east, it's still quite difficult.
That's the AEP pipeline, isn't it?
That's the Mukpia-Skravas pipeline, yeah, correct. So therefore we go out through 2 terminals, the Chevron terminal, which is the Skravas terminal, and also we use the Shell terminal, which is the Forcados terminal. So we have dual outputs for that oil. And that's quite critical. As you start to see more barrels going to the terminals, therefore more exported from country, and the dollar's coming back in. That's been one of the biggest things we've done. In the east, again, we are relying on one pipeline system, although we are supplying to a local refinery in the east. And again, we want to be developing one more pipeline through the brass system within the east. So the secret to Nigeria, I think, is simplifying the above ground. Right, that's always the challenge. Below ground is without a shadow of a doubt one of the best in the world. No doubt about it. So that's then translated into a lot of better production for us. In terms of returns, etc., have been much better in 2023 than previous years.
Yes, clearly that AEP option has helped operating reliability a lot. And maybe just thinking a bit more about projects. So you've got your big ANO gas project. That's sort of maybe been a bit delayed, but your guidance is that it comes on from the 3rd quarter of this year. Perhaps you could talk a little bit about what the key issues around that have been, what the critical path items are, and what we can look forward to from ANO itself.
Yeah, so the ANO gas plant there's an enormous gas field. So OML 53 that we have a stake in is unitized with OML 21, and so there's multiple TCF of gas in the east. The decision was made some years ago to build 2 gas plants. Shell was going to build a 300 million gas plant, and we will lead with our government partners, AGPC, to develop a 300 million scuff plant. That is, it's a massive site. It's a 100-hectare site. On it, we've got the big gas plant. There's the upstream oil wells or gas wells. We've also got LPG, and that's very critical in terms of bottled gas going forward. We're very close to mechanical completion. At the end of 2023, we're relying on 2 pipelines, which are being developed by government. So there's one from the gas plant into the main OB3 pipeline, which will take the gas into the west, which is where what a lot of demand is. We're fingers crossed those will be completed in Q1 next year. We're confident for completion of the mechanical completion of the plant. And then when that's up and running, that's a material amount of gas being developed. Shell is slightly behind in their side of the development, but again, that will be developed, and there'll be 600 million scuffs. So that gas field will then supply the west, but also the east. We're looking at other opportunities around that. It's going to be a material plant for us. It is slightly delayed, but then it's difficult. It's not easy in terms of the security situation in the east. It's been challenging, but nevertheless, we've made good progress.
Because the bulk of the delay has been with putting in the third-party infrastructure, hasn't it?
It has been, yeah. It has been there. But, it's a circa $700 million project. It's quite material. And we've said Q3 2024 for first gas. That's predicated on the pipelines being completed in Q1. And then what we've done is we've built a buffer of 6 months in case there's any more slippage.
Okay. And then when first gas does come on, or when gas production starts up, what does that mean for you operationally, and what does it bring you financially?
Yeah, so it's pretty material. So in the upstream, the way that it works is that we're selling wet gas into the gas plant, and that's in line with the Petroleum Industry Act, which sees the separation of gas from the upstream into the midstream. So that what will happen is in the upstream, we will obviously monetize 300 million scf a day of gas supplying into the plant. Then what will happen is the condensate will be stripped in as a midstream and will be sold as a midstream byproduct. So what you'll have is dry gas coming from the gas plant. You're going to have a wet gas sales from the upstream in there. And then the condensate sales in the midstream will then obviously bring dollars in, because that will be monetized in terms of condensate sales. And then LPG, which is, Nigeria desperately needs to move away from firewood for cooking. And so that's leading to a lot of deforestation, and therefore LPG will then go into bottled gas, and then people will use bottled gas for cooking. So it's going to be material, and then so there's going to be upstream revenues, and then obviously dividends coming out of AGPC, and we've guided that they will be $30 million in terms of full operations. It's going to be a material part to our revenue stream going forward.
And that's because you have a 50% interest in the AGPC plant joint venture, isn't it? That's where the dividends come from.
That's correct, yes.
So it's the upstream gas supply. You make money out of selling the gas to the plant, and then from the plant, you get a dividend stream once that's selling processed gas.
That's correct, and it's an what we call an corporate joint venture with government, 50-50. There were 7 critical gas projects outlined some years ago. This was one of them. This will be the only one of the 7 being delivered, or be the first of the 7 delivered. So we're very excited about that.
That's great. So obviously a big project for you, but it's not the only big thing that could happen this year, is it? You announced a couple of years ago the acquisition of ExxonMobil's shallow water assets. And that whole project has taken, or that acquisition has taken quite a long time to come to completion, but it's transformational for you, isn't it, when it happens? And just looking at your reports, you sound actually increasingly confident that that is going to be consummated. Could you talk to us a little bit more about what it would mean for you when it happens, and also why you're as confident as you are?
Mobil Producing Nigeria Unlimited is MPNU. Was owned by Exxon, and what we're doing is we're buying the entire company. So that's for shallow water offshore blocks, all the related infrastructure, onshore terminals, pipelines, etc. People, liabilities. It's a living, breathing company that we're buying. We signed the sale and purchase agreement, 25th of February 2022. So we're coming up almost to 2 years of it since signing the SPA. There's been a dispute with the national oil company that believes they've got the rights to preempt the transaction. The reality, our view is similar to Exxon's, because we're buying a company, there's no preemption rights. But anyway, that aside, we have been waiting for approvals for the last couple of years. I think we're making progress around that. In reality, no one's winning. Exxon's not investing because they're divesting. The government's not seeing the growth in terms of the gas and the oil in the blocks. We haven't got a transaction, and then NPC doesn't have a developing asset. So we're working with the national oil company and also the government to try to get to a resolution, and we're hopeful that we can get this done very quickly. What it will mean for us as a business is it's very, very material. So we estimate probably our turnover revenues will probably go 2 to 3 times what they are today in terms of the production. If you're looking then in the reserves, it's a doubling of the reserves. There's material oil production, but actually in reality also there's a massive gas resource across those 4 blocks. Exxon never monetized that gas, so what they did is they re-injected it, or they took some sort of low-level monetization. And what we want to do is look at LNG options of that. There's enough resource there for LNG exports, but also domestic gas. And because we're one of the leading domestic gas players in the country, we have the skill set to do that. And so monetizing that will be very, very material. And we'll go into many, many years, 10 to 20 years into the future. It's really going to set Seplat as a really material major producer within Nigeria.
Well, we all keep our fingers crossed that that does come to completion this year. And just starting on a completely different subject, at the beginning of last year you faced quite a bit of vexatious court action. I think all of that's been seen off, and it's resulted, I think, in an acceleration in what you're doing with board succession and planning and so forth. Could you talk a little bit about governance, how that's changing and what you're expecting out of all of this?
Yeah, I mean, Seplat was set up all those years ago to be there for the long term and really start to grow and be that sort of major independent. There's always going to be bumps in the road in anything like this, and this year we had some court actions. We successfully put those behind us. There's some stuff still in court, so we don't talk about that too much, but largely the company is in much better position after the challenges. The board succession started all those years ago, and the idea was to have that very orderly board succession where we're actually by end of March next year, our oldest board members, so our current chairman and our senior independent director, will step down. And we've already announced 2 new board directors. They started 1 December. There's a third one coming in 1 April. And then what we'll have is we'll then have the election for chairman. In Nigeria, the way it works is the board members vote the new chairman in. So on the 1st of April, there'll be an election. There'll be another chairman in place in advance of the AGM, which will be in May. And then the company will then grow into the future. And we're very excited. This is a company that's going to stay long-term, is a very orderly board succession, a skill set across the board, which I think is quite unique. I think we've got some very experienced board members, majority Nigerian, but we have a range of expats there as well. But the company, I think, is extremely well set up for the future.
Excellent. And that's all happening through the course of 2024, through the AGM and all of that?
Yes.
2024.
Yeah, that'll happen in 2024.
Cool. Thinking a little bit more directly about investors, I mean, you already offer a 7.5% yield on your enhanced dividend. You've indicated that there might be another special dividend in respect of 2023. Could you just talk us through what the distribution policy is for the business and how you frame that? Yes,
I mean, look, our capital allocation, if you want to call it that, it's very critical that, obviously in the oil and gas sector, you need to spend money to stand still. And to grow obviously takes more money. So we need the capital going into the capex and development. But at the current oil prices, on our margins at the minute, and even lower oil prices, we've always paid a dividend. I mean, I think we've paid, since listing, we've paid back $560 million of dividends, which we raised $535 million at the IPO. So we've paid more back than we've actually raised, and we'll continue to pay dividends in the future, and our business can support that. So if I then look at it, how do we then, obviously beyond capex, how do we then obviously return value to investors? And we have a core dividend of 12 cents a share, which is about circa $75 million a year. And then in 2022, we paid 15 cents. We topped up on the basis of that. That's a $90 million dividend. I think that's very supported on our existing core business. Never mind, the expansion projects that we're looking at. We talked a little bit about. I think in terms of the sort of security around that dividend is there, okay? And to the extent beyond the expansion projects, we'll look to grow that dividend. So in terms of an investor, you've got value in the upside in the share price, and also you're getting a very good yield. I think with the special, I think it's almost close to 10% yield, which I think is very, very strong.
So we've talked quite a bit about 2023 and some of the things that could happen in 2024. Obviously, at the moment, your rating looks very undemanding given the things that we've been discussing. So perhaps you could highlight some of the things that you would pick out as being the kind of catalyst that an investor thinking about participating in your stock might find compelling.
Yes, well, if I look at this, let's look at a number of aspects, right? So first of all, on the macro, I think the changes that the administration is making will then start to come to fruition in 24, and the macro will be more favourable for companies like Seplat to be able to capitalise on and grow. Then I look, and that's going into things like, you know, rating. So we're rated the same as a Nigerian sovereign. With the macro improving, the ratings of Nigeria should improve, and Seplat will improve as a result. There are the PIA, the Petroleum Industry Act, has brought through a number of incentives in terms of royalty incentives, tax incentives, and Seplat's an indigenous player. Will capitalise on that. I think the PIA will then be another catalyst for upside for the business. And then there's a number of projects we've talked about. Okay, so we've got obviously the ANO gas project, and up and running by Q3 2024, and then that would be very material in terms of revenues in the upstream and the midstream. MPNU, and we are our view is we're heading towards the completion of that. And what that will then mean is very material growth in revenues, in reserves, and huge gas potential, both internationally and domestically. We're doing another gas plant and completing Sapele gas plant in 2024. And I think all of these catalysts will then start to bring more value into the share price. We're still paying the dividend, and we will continue to pay the dividend. We're confident we can grow that dividend with some of these catalysts coming in. You know, and when I look at my time in Nigeria, you know, I've spent well over 20 years coming to Nigeria. I've been at the company for over 10 years, and I've been CEO of Seplat since 2020. You know, Nigeria gets under your skin. It really is infectious, and it's a country that you know has enormous potential. You've got to understand it. It's complex, but it is hugely, hugely potential. And I love it as an individual. And I want investors to come into Seplat and see what Nigeria's really got to offer.
Roger, we can see your passion for Seplat and for Nigeria. And as CEO of the company, that's been really, really helpful. Thank you for that. And viewers, thank you for watching. And if you'd like to find out more about Seplat Energy, please do contact me or the company through James on the details that will be coming up on the screen at the end of this interview. And with that, it just remains for me to wish Roger and Seplat all the best for 2024. Thank you.